Hey everybody, Smart Silver Stacker here. Let's talk about what's going on in the price of silver. We had a big move up yesterday in silver. It went up more than $1 per ounce. That's more than a 5% move in one trading session. Now, what was the catalyst for this? Well, it was the surprise announcement that we got from the Bank of Japan that they're going to be tweaking their program of bond buying, their yield curve control, and they are going to allow the Japanese 10-year bond to go up in rate by 25 basis points. So 0.25% higher for the 10-year Japanese government bond. And this announcement was enough to cause the bottom to fall out of the dollar. It triggered the biggest move in the yen against the dollar in more than 25 years, about a 4% move up. And it also caused the price of gold and silver to spike up in a very big way. But, the fact that this announcement was enough to throw markets for a loop and that this was the big surprise announcement, if markets are this surprised by the Japanese central bank tweaking their policy, then just think of how absolutely shocking to markets some of the developments that we are likely to see over the next year are going to be. That's what we're going to talk about in today's video. So let's get to it. Okay, so here is the 5-day chart of the price of silver, and you can see there was that big move yesterday. The beginning of trading, silver down around 23.20, and then it finished up the day well over 24 bucks. In fact, at the high is about $24.42. Now today we are pretty flat on the price of silver, but it is hanging on to all of those gains. And again, this was all based on this announcement from the Bank of Japan, jolting markets, as Reuters says here with their headline, in a surprise change to their yield curve policy. And basically what happened is the Bank of Japan's target interest rate for their 10-year bond is 0%. And up until yesterday, they were allowing that yield to fluctuate 25 basis points in either direction. And then yesterday, they announced that they're going to allow that rate to fluctuate by an additional 25 basis points. So they'll let it go 50 basis points in either direction. So this is not an end to their program of stimulus. In fact, they announced, I believe, that they will be increasing their program of bond purchases. They're just fine-tuning their yield curve control here. That's the story. It's a big surprise. We keep seeing that word, surprise, surprise, surprise. And this move was enough to cause the US dollar index to drop sharply. The yen was up the most in 25 years, up about 4% against the US dollar, and we saw the price of silver and also gold, we saw them both spike up on this news. Now, am I thrilled that the price of silver has moved higher on this announcement? Well, not really. I mean, today I just bought a kilo of silver. I just ordered this from SD Bullion. They're having their end of the year sale. They've got these kilo bars for $1.49 over spot, which, as far as premiums go, is pretty good relative to what we've seen so far this year. But still, even with that low premium, this kilo is costing me significantly more than the last time. A couple months ago, the price was about 19 bucks. I think I paid under $700 for the same listing, a generic kilo bar from SD Bullion. And today, I ordered this one, and I'm paying $8.25. So, am I thrilled about that? Well, not really. I mean, as a stacker, I would like the price of silver to go lower, but that's just not the world we live in. Back in September when silver was around its lows, I remember a lot of people telling me, oh, silver's going to fall to 14 bucks, 8 bucks. And I did think that there was the possibility for, like a spike lower in the event of a major sell-off. And I think that threat persists. But regardless of that possibility, I am still steadily adding to my stack. And the reason why has a lot to do with the US dollar. So we saw what happened to the US dollar on that announcement from the Bank of Japan yesterday. And when you buy silver, really what you are doing is you're kind of betting against the dollar, because we've already seen what happens this year. When the dollar goes up in strength, the price of precious metals comes down, and now we're seeing the price or the value of the dollar as measured by the US dollar index relative to other foreign currencies. It's declining. And the price of gold and silver are moving higher. So let's take a look at the chart for the dollar here, and let's talk a little bit about what I believe we're going to see moving forward in regards to the US currency. So we've looked at this chart before, but I think it bears repeating that the US dollar has broken down in a very big way from the parabolic uptrend that it has been on since 2021, since mid-2021. And why is it breaking down? Well, there's a number of factors weighing on it, but largely it's, I believe, because we're coming towards the end of the Fed's cycle of rate hikes. We just got a 50 basis point rate hike. That ended a long string of 75 basis point rate hikes from the Fed. And, it looks like they're slowing the pace. And regardless of how much tough talk they have regarding their inflation fight, the dollar is reacting kind of as you would expect it to if the dollar has, in fact, reached the end of their tightening cycle, or they're getting very close to it. And there's also several other factors weighing on the dollar right now, and I'd kind of like to get into those in a little bit in depth in this video. Now, one book that I read in 2022, which was great, and I would recommend it to everybody, was Principles for Dealing with the Changing World Order by Ray Dalio. And I want to take a look at some of the charts and graphs that are included with that book, because I think they kind of illustrate the situation that we find ourselves in pretty nicely in regards to the dollar and its status as the world reserve currency. So this is one that I think is a very great chart. It documents the rise of a world power, how it kind of tops out, and then finally the decline. And the decline is what I want to focus on today in this video. So you can see that the decline has several parts according to Ray Dalio, and one of the first ones is large debts. Now, I think it's safe to say that we can check that box. We've got $31.4 trillion and growing national debt. The total level of debt in the United States now about $93 trillion. Unfunded liabilities well beyond that. So debt is a major problem here. We've also got record high credit card debt in this country. I mean, all sorts of debt are just absolutely out of control. And that doesn't seem to show any signs of slowing anytime soon. In fact, in 2023, I think that one thing we're going to see is an absolutely ballooning U.S. federal budget deficit. So right now it's about $1.2 trillion. I would not be surprised if in 2023 we exceed the $2 trillion level on that deficit. But then moving forward here on this chart, one of the next steps is printing money. And we can check that box too. There's no doubt about that. Here's a chart of the Fed balance sheet, and this goes back to 2007. And the reason that the chart starts in 2007 is because that is when the money printing really began in earnest. Or really, it was about 2008. And you can see that 2008, we saw the first spike up in the Fed balance sheet from under $1 trillion to over $2 trillion. And that's the Fed coming into the market, monetizing debt. I mean, Ben Bernanke, he told us it would be a temporary thing. They would unwind the balance sheet. Well, and it's been 14 years. They haven't done it yet. And as you can see from the chart, the trend has actually been quite the opposite. But they came in and they started buying up U.S. government debt, mortgage-backed securities, these bad assets, also buying up bonds to keep the yields low on U.S. debt and stimulating the economy. And that trend continued for some time. I mean, we had QE going on for years and years. They never managed to really halt those programs. And then you can see here in 2018, they did try once before to unwind the Fed balance sheet. They were up to about $4.4 trillion, and they got down under 4, actually. They got down to about $3.7 trillion in 2019, and then whoops, the repo market broke and they had to come back into the market and intervene. That drawdown in the Fed balance sheet didn't really work out, so that's more money printing. Remember, every time the Fed buys up these assets, they are printing the money out of thin air and then putting it into the economy through these programs of asset purchases. And the balance sheet then continued to grow, and oh, there's 2020. We know what happened there. Huge spike up in the Fed balance sheet, tremendous amounts of money printing and money creation, and then that's a trend that has continued up until this year. Now, the Fed almost hit $9 trillion on their balance sheet, and they've been coming down so far this year for a brief period of time. Their program of quantitative tightening, right now they're supposedly selling $95 billion worth of bonds onto the market every month. I don't think they're quite hitting that target yet, but you can see the balance sheet is coming down. But I am under no illusion that they're going to be able to get this balance sheet down anywhere near $0. I mean, I would be shocked if they managed to get under 8 trillion before we see another reversal and another one of these big spikes up. I mean, that is coming. Once you commit to a policy of money printing like this, there's really no going back. I mean, there's no way that the Federal Reserve can sell $8 trillion worth of assets off of its balance sheet onto the open market without absolutely destroying the U.S. debt market and the U.S. economy. And that's just the situation we find ourselves in. So next up on the list, we've got internal conflict. And I mean, I think it's safe to say that we have checked that box as well. I mean, we are at a period of divisiveness here in the U.S. like we have never seen before, at least not in my lifetime. I mean, there certainly have been times of internal conflict in the past, but in my memory, I can't remember a time when people have been more divided, whether it be politically, socially, what have you. There's a lot of conflict. And then you'll notice that the next step on this decline is the loss of reserve currency status. And it's interesting to note that that loss of the reserve currency status is actually one of the last things that happens in the decline of a major world power. That fact is illustrated by this chart here, also from Principles for Dealing with a Changing World Order. This is an index of key determinants of U.S. power. And you can see that education, the blue line here, fell off the charts a long time ago. We've got trade. U.S. importance in trade is declining, and that goes hand in hand with this decline in economic output and competitiveness. Here in the U.S., we manufacture very little. U.S. workers are not competitive because of the high wages that they demand and because of all the regulation here. That's why we've seen a lot of these jobs outsourced to other places like China, for example. Also, innovation and technology is dropping, and that's kind of what you would expect following a decline in U.S. supremacy in education, sort of a lagging indicator. First education declines, and then your ability to innovate and come up with new technologies declines shortly thereafter. And the three things that we still really have going for us, according to these charts, are our military power. Now, the U.S. is not the pinnacle of military power that we once were relative to the rest of the world, but we still got all these aircraft carriers sailing around the world. We've still got the ability to project force like no other. But that may be on the wane as well. And then we do still have our global reserve currency status and our status as a major financial center. But there have been some significant developments in this year, in 2022, which really threaten both of those statuses. One, our status as a financial center. Yes, most payments still do go through the U.S. The United States dollar is still used for settling the majority of international trade. But, by weaponizing the dollar and also our financial payment systems like SWIFT, for example, this year in our economic war and sanctions against Russia following their invasion of Ukraine, we've really kind of showed our hand here to the rest of the world that, hey, if you don't toe the line that the U.S. wants you to, if you come to odds with us politically, then we may turn that status as a financial superpower against you. And that is actually something that in the long run will undermine our power as a financial center and undermine the dollar as the world reserve currency significantly. So I think that 2022 may actually be peak U.S. financial power. And we'll talk a little bit about why here in just a moment. Here is a chart of the dollar's status, or the dollar's percentage of global currency reserves. And the dollar is this dark kind of greenish gray color here at the bottom. And you can see that still the vast majority, the lion's share of world forex reserves are held as U.S. dollars. We make up, I think, about 60% of world foreign currency holdings. But some of the other things you'll notice on this chart, this brown section, for example, that is the Chinese yuan, and they weren't even on the chart until a couple years ago. So there are some competitors sneaking in there and stealing market share away from the dollar. And the dollar right now is still the biggest currency. It's the most held. It's the most dominant currency. But I think we're at the top, and there's only one way to go from there. And there's a lot of writing on the wall that shows that the dollar status as the world reserve currency is under significant threat. And, that's the sort of thing that makes me want to bet against the dollar and buy silver. Now, could the dollar strengthen in the short term? Could the price of precious metals fall? Absolutely. I mean, none of these things move in a straight line. But when I look at the long term, and, I'm buying silver for the long term. I'm not trying to flip silver and make a quick profit. I'm buying it as a long-term store of wealth. Seems like the dollar is looking a little long in the tooth for the long-term picture. And this is a story, central banks continue to stock up on gold from a couple weeks ago, December 7th, and covers a number of interesting points. For example, the United Arab Emirates, they were the biggest buyer of gold in October. I've covered several times on this channel how 2022 is the largest year of central bank gold purchases since 1967. So, these central banks, they kind of see the writing on the wall. They know what's going on. They want to get out of dollars and into gold, and we've been seeing that move. There's a big sell-off in U.S. treasuries that is ongoing around the world, and a big move into hard assets like gold and silver. Now, central banks don't buy silver, they buy gold, but where gold goes, silver follows. That is a trend that we have seen time and time again, and I don't think that there's going to be any exceptions to that rule this time around. Central bank gold holdings, the highest level since 1974. And China has been accumulating gold at a rapid pace, but it's not just them. There's all sorts of countries buying gold. Turkey, Uzbekistan, the UAE, Kazakhstan, lots of countries around the world want to get into gold. And there's an interesting quote here. This is from an opinion piece written in Bloomberg by Dave Fickling, and he has this to say about the motivation for countries getting into gold. It says, bullion does have one crucial advantage. Unlike bonds, it doesn't bind you into a relationship with an unreliable counterparty. In a world where you can trust no one, it makes sense to bulletproof yourself with metal. And I think that hits the nail right on the head. This year, when countries around the world see the U.S. seizing Russian dollar-denominated and euro-denominated forex reserves, and not only freezing them, but potentially seizing them, and maybe even redistributing them to Russia's military opponents in Ukraine to help finance a war against them, that is sending a pretty clear signal that if you're holding your reserves in dollars, that you are at risk of receiving the same treatment. You could be punished by the U.S. for holding U.S. dollars. And while this may help us to achieve our short-term geopolitical goals, this dollar weaponization, I think ultimately it is very short-sighted, and this is sending a very clear signal to the rest of the world that, hey, you might not want to hold so much of your reserves in dollars, especially if you think that there is a possibility that you might come to blows or be at odds with the United States and with the West. Think of China, for example. I mean, they're thinking of launching an invasion of Taiwan at some point, which we know they are considering that. Do they really want to have so much exposure to dollars? Do they really want to open themselves up to that risk of sanctions and economic warfare? No, they want to be in gold, because the United States can try to sanction gold. Maybe we can have some impact on them. I mean, all we can really do is stop U.S.-based entities from taking or exchanging gold with these countries, but we can't freeze their gold and seize it the way that we can U.S. dollar-denominated reserves. And so, again, this year I think is probably peak dollar reserve year, and I think that we're going to see the dollar as a world reserve declining. Now, it's not going to go away overnight. The dollar has been the world reserve currency for more than 80 years, so you don't unwind that in 1 year or overnight or in a couple months. But I think the writing is on the wall and the trend is clear. The dollar's status as the world reserve currency is in decline. And again, that's why I'm stacking silver for the long term, because I'm not trying to time the market and make a quick buck off the price of silver. And there is the possibility that price of silver could drop sharply at any time. It's a volatile market. I mean, just look at yesterday. On some small announcement, we see it go up 5%. And the same can happen on the downside. Silver moves a lot faster than a lot of these other markets because it's so small and less liquid. But that's also part of why I want to have exposure to it, because I think when the day comes, when the dollar does lose its world reserve currency status and we get some really surprising announcements, not the Bank of Japan twiddling with their interest rates, but something like oil being repriced in gold or Chinese renminbi, or a nuclear weapon going off in Crimea or somewhere in Ukraine, some actually surprising event, some kind of a real shocking event that we're going to see the price of silver move like you wouldn't believe. There's going to be days, I think, when you see 10, 20, 30% moves up in the price of the metal. And it's not financial advice or anything, and I'm not saying that that's going to happen anytime in the near future, but I do believe that before all of this plays out, that is the sort of, surprise that we're going to see. It's going to be a much bigger surprise than this announcement by the Bank of Japan. Another thing I want to point out here, this is a chart that was tweeted by James Anderson the other day, and I thought this was pretty interesting because central bank reserves around the world, central bank reserves of gold, are at the highest level since the 1970s, but the percentage of their foreign reserves made up by gold have not moved up nearly as much. Now, how does that make sense? Well, it's because they're holding so much more fiat currency than they were back in the 1970s that in order for this percentage, in order for gold's percentage of these banks' foreign holdings to move up to the levels it was at in the 70s, they're either going to need to buy a heck of a lot more gold, or we're going to need to see the price of gold appreciate drastically in terms of fiat currencies, priced in dollars and other currencies. And I think it's going to be a little bit of both. I do think that banks are going to continue to buy gold, but I think that even more importantly, we are going to see some very significant moves up in the price of gold relative to these fiat currencies. And it's exactly because of all the money creation, of the fact that there's so much more currency out there today than there was 50 years ago. The price of gold today, under $2,000, you look at 1971, the price of gold at $35. Yeah, that's a pretty big move up, but the move up from 35 to around 2,000 does not account for all of the currency creation that has occurred since then. And before this is all said and done, there is going to be an accounting for all of the paper that has been created. Now, just a sign of the times here, this is the last thing I want to cover today. This was an announcement we got today regarding how the U.S. is going to be sending Patriot missile batteries now to Ukraine, in addition to $1.8 billion more in aid. And, you can read that as $1.8 billion more worth of weapons. This is a sign of a major escalation in this conflict in Eastern Europe. So this is really the crux of this conflict and the threats to the U.S. dollar. It's this division between East and West, with the U.S. and Western Europe and Japan and Australia and a few other countries kind of on one side, and then you've got like Russia and China and the BRICS nations and this other block of countries, which includes now possibly Saudi Arabia, the UAE, Nigeria, all these countries that are talking about joining the BRICS organization. They're on the other side. And what does the U.S. have in this conflict? Well, we got a big military, we've got the world reserve currency, paper currency, and we've got our financial power, the SWIFT system, the well-developed and integrated financial system that we enjoy and that most of the world participates in. But on the other side, they've got a large portion of the world's productive capacity, got a lot of the raw resources, a lot of the manpower, a huge portion of the food and population and all that. At the end of the day, it's not really about who wins this conflict in Eastern Europe. To me, it's about what's going to happen to the dollar as a result. So I don't even know what winning at this point would look like, but the conflict is escalating. And even if the West does somehow manage to pull off what they would consider a victory in this conflict, the long-term picture for the dollar is not good. And even in a world in which the West, is quote-unquote victorious, it could still mean the loss of the dollar status as the world reserve currency. Just think about World War I and World War II. Those were kind of the events that led to the predominance of the U.S. dollar. We got the Bretton Woods Agreement after World War II, where the dollar basically became a gold-backed currency that backed up all the other currencies around the world. Well, World War II was the end of the British pound as the world reserve currency. And remember, Britain was on the winning side in that war. Britain won World War I and World War II, and yet the debt and the expense of both of those conflicts combined, it cost the UK their overseas empire, and it also cost their currency its status as the world reserve currency. So you can win a war and still come out on the other side a lot poorer. And that's because, war is incredibly destructive of wealth and human lives, and nobody really wins. I mean, the only winners in these conflicts is the arms industries. You can go look at the stock market, look at the price of Raytheon or any of these companies that makes weapons. The military-industrial complex. They're making money hand over fist at the expense of the taxpayer. In this article, it's another $1.8 billion. Well, guess who that money goes to? The military-industrial complex. They're the real winners here. But nations as a whole and the taxpayers and the citizenry of these countries, they're the losers, and the dollar, I think, is going to end up being a loser too, because if this conflict escalates in 2023, and it's looking like it will, I mean, just think of these Patriot missile batteries. They're going to be crewed possibly by Ukrainians that have been trained on operating them, but there's also talk of crewing them with non-Ukrainian NATO personnel. So if you introduce NATO personnel into Ukraine, firing Patriot missiles, possibly shooting down Russian manned aircraft, I mean, we are one step closer to World War III, folks. And if this conflict escalates in a significant way, which it's looking very likely, the expense and the cost in terms of US dollars is going to be tremendous. And, this $31.4 trillion debt that we have, it's going to start looking small by comparison. And this $1.2 trillion deficit that we have right now, it's going to balloon up in a big way. And none of this is a good portent for the U.S. dollar moving forward. I mean, in the short term, I think there's some significant threats, but in the long term, the final outcome for the dollar is guaranteed. And that is nothing new. That is pretty much the status quo for fiat currencies throughout history. And that's why I am betting on physical, hard, tangible assets like silver. So let me know what you think in the comments down below. Thanks for watching, everybody. I'll catch you next time. Stay safe and happy stacking. Smart Silver Stacker, out.